and welcome to our special pre-budget series, Ideas for India. Today we discuss what the budget can do to improve the banking sector and thereby improve lending in the economy. I have with me three stalwarts, Mr. Pratip Chaudhuri, former chairman of the State Bank of India, Mr. Umarji, former legal advisor to the IBA and one of the authors of the Bankruptcy Code, and Rajat Bahl, director, CRISIL Ratings. Gentlemen, welcome. Well, first up, Mr. Chaudhuri, let me ask you this. The government has a very important balancing act to do. There isn't so much that surplus in way of spending, and yet the banks, the public sector banks, need capitalization. Just as a person who has seen the economy, is it better for the government to contribute more to the banking capitalization, even if it meant taking away money from the infrastructure and other expenses, simply because that is a more efficient way of spending on the economy, rather than the government directly going and spending, say, on roads or other infrastructure?
Banks should have to be capitalized, and for example, I just take you back in 96-97 when the new provisioning norms and asset recognition norms came. All banks collectively, except SBI, 17,000 crores was the amount required at that time to capitalize banks. But I think it is not good not to panic, because the government is having a good bonanza, a windfall from the drop in crude prices, and so are the people. So it is better to take compost steps, and there are success stories. Just look at our neighbor China. Now what they did, they said railways, let it be the prime driver of the move. Now government also had resource constraint, so they said our banks have mobilized deposits from the people, so you please lend to railways, and I will give a guarantee. The government will give, because the railway assets cannot be taken away from the country. One simple step would be the railway capex from 45,000 crores, increase it to 1,45,000 crores, and ask banks to lend to railways, and government gives a guarantee. That itself will catapult the railways into a different league and will generate a multiplier effect in many sectors of economy.
The way in which fiscal deficit is counted, very soon off-balance sheet exposures will also be counted. But that's another matter. This is certainly a constructive idea that you have, where the government, instead of investing directly, can recapitalize banks and leverage on them to build the same infrastructure instead of building it with their own money. Well, Rajat, actually the recapitalization number, how large is it? We just heard Bank of Baroda saying that I can do without capital for 18 to 24 months. Therefore, is that 70,000 crore capital over 3 years that the government is talking about enough? Until now, everybody thought it was not enough. But suddenly, Bank of Baroda is giving the impression that they can grow without capital infusion. Just clarify, what is your number?
So our number before we got into the current mess was for public sector banks at about 2.7 lakh crores of total capital till
over 3 years?
2019. 4 years. Till 2019. Okay, so that was the number. This number is obviously now going to go up. For this estimate, we were at about 0.5% ROA, return on assets, that public sector banks would make, little under that for the current year, and slightly above that for the next year. The way things stand now at the end of 9 months, public sector banks are at a zero profit, so ROA is 0% for 9 months, and even if optimistically we continue at 0% for the full year, we are looking at another 30,000 crores given the depressed growth. So that's something that will help the banks, because that will mean lesser capital. But with a lower growth, we'll still mean adding another 30,000 crore at least to the capital estimate. So reaching about 3 lakh crores. But this is assuming 0% ROA for the full year, which is not likely the way things stand now. We are looking at definitely a loss for the full year for the entire public sector banks put together, which would add further pressure. So it's maybe another 20-30,000 crore will get added just from what's happening in this year. And to that we will have to add the depression in profits next year, which will add further amount. But to what Bank of Baroda is saying, so these are all estimates based on the current sort of business model that the banks operate with. There is obviously something that can be changed. One is obviously reduce the growth further and let private banks take on a larger percentage of the share of the credit growth. The second is moving to the asset classes where the risk weights are lower. And that's what banks are talking about, and that's what even Bank of Baroda is talking about. Moving to a retail asset class, mortgage lending, where the risk weights are much lower, and that's the way they will save capital. And the third aspect of trying to squeeze further wherever possible on the unutilized credit limits. Even though that in the current scenario seems unlikely, because very likely that most of the corporates are under stress and would like to utilize the maximum limits that are available with them. And reduction of that limit, at least in the current scenario, looks difficult. But definitely a move to retail can help save capital. But again, that's not possible with most of the public sector banks because they're not geared up for lending to the retail segment. Lending to a retail segment is very different from the corporate lending that they do.
No, actually, they have a lot of interface with retail, but also that's getting an extremely crowded trade. My question to you is not about that. My question is very specific. If the governor has been repeatedly saying that the promised capital from the government is enough, and he has some levers like deferred taxes or perhaps recognition of real estates with haircuts as capital, as tier 1 capital. My point is, if on budget day the announcement were once again what was in the timetable, 25,000 crores, will that be a huge disappointment for you? Do you think that will make you look at several banks on the verge of a credit downgrade?
Yeah, so we are definitely expecting an increased promise of capital from the government, whether on the budget day or around the budget. It doesn't necessarily have to be announced in the budget, but around that time is when we are looking at the government definitely promising much more capital, because our ratings really for public sector banks, we have a floor of high safety, which means we don't go below AA minus. For any of the public sector banks, unless obviously things go completely awry. That's sort of the floor that we have. This floor is on the expectation that the government will continue to support and given as much capital as is required to keep some cushion on the regulatory requirements of the capital.
So even if the number is not more than 25,000 crore, it is as per timetable, you don't think they are in danger of being downgraded by you, simply because if the need arises, you're quite sure the government will increase that amount?
We are sure, and that's why the ratings are sustaining, but that surety needs to be reinforced by the actions that they take now and the commitment that they
my point is, assuming the same number is announced, what's your reaction? An immediate downgrade is on the cards?
For the current year, another 5,000 will mean a few banks likely to go below thresholds, which doesn't augur well for the ratings. I think about 9 banks are very close to their regulatory ratios, the tier 1 ratio that they are at. So 9 banks definitely need a lot of capital, and even the others will need some capital for growth. So even forgetting the growth for now,
but the danger will be kind of spaced out, isn't it, Rajat? Because they will not on budget day tell you which bank is getting how much. So you really will have to wait for the apportioning before you take any action.
Yeah, but only 5,000 crore is not going to be sufficient for just these 9 banks also.
I thought it was 25,000 crore, isn't it?
20 has already been given.
No. Rajat, you're not getting my point. All I'm asking you is, if on budget day, this 5,000 crore has to come, because that's already promised for the current year. The budget day promise will be for the next year. If that stands at 25,000 crores as per the original timetable, you're not seeing any downgrades.
So for the next year, again, I think 25 is not going to be enough. We are talking about 3 lakh crores on the whole requirement in 4 years. 70,000 being promised still leaves 2.3 lakh crores. I don't think that much can come from tier 1 issuances or dilution, at least at this point of time. Whether the government will really be able to dilute.
You're not answering my point. If that 25,000 is announced, are you going to downgrade that day or in the next 1 week?
Latha, can I come in with a cashless solution?
Yeah, immediately after Rajat answers, sir. Yes, Rajat.
Yeah, so it's not a day that decides what happens to the ratings. We are in dialogue with the government also to understand their philosophy and how much capital they're going to increase. I think there are indications that the capital will be increased. So it's not that on 29th what happens and the 25 banks are under pressure.
Fair enough.
It's the expectation when the government is talking about additional capital.
Yeah, I think I have a simple solution for this. You know, let RBI abolish the cash reserve ratio, CRR. And let the CRR amount be invested in government securities to take a riskless position. It would be less.
Mr. Chaudhuri,
so it is a one-line solution.
I take your point, but I can almost definitely expect the Reserve Bank not to do it because they are wedded to the extent
that is dogma.
They are wedded to the extent of money creation.
And not economic rationale.
Mr. Chaudhuri, that's a different argument, and I cannot accommodate that argument when we are discussing the budget. We'll come back after a break and discuss what the budget can do for banks. We are back in a minute.